Hi guys, and welcome to FX Market Strategy. We're just looking at the Bitcoin. Start guys, I would like to mention Cardano. We have put some signals lately in Cardano. I can see Cardano. I love this currency. I think it's one of the future ones. Okay, right now it's making a correction, but if you go to something bigger, this currency has been added to the, just let me clean this a little bit. Okay, this currency has been added to Bloomberg and Coinbase recently. So this has a lot of future, guys. If you have been following me, you will see the latest charts I have added right here. Okay, basically we can share it. Not showing off or anything, just you guys can check all the analysis to see what's wrong, what's right. It's not about this, it's just about it has a future. What I mean, it's possibly good investment. So if you throw $500, $1,000, and just leave it for a while, it's probably not bad idea. Okay, if this is not a big amount for you, what I'm saying, So I'm just gonna get some of the. Okay, so I'm just gonna change the screen right here. Just bear with me a second, please. See, guys, we are jumping to the screen right here. Please, if you don't have any question, let me know. So right there. Hey guys, so I have the chat in a second separate screen so I can see if you guys ask questions and stuff. So I'm just gonna click on this one. So you can see this one. Where is it? This is the screens. So that's one of the ones right here. Say Cardano 1.98, then 2.32, Bitcoin to test 42, then possibly fall, right? Okay, you can see this one. Second one's right here, Cardano People Lover. Okay, it did come all the way down to test this area and just like bang, it did break and go up. Okay. This one in the go. There was another one right here. This one, I think this one was nice. It's like bang, see? I think this currency has a future, guys. So if you have a little bit of money and just leave it for a while, this can be shooting to $100 after a while. It's just, projection. No one knows the future, right? Or just say, talking together. Would I invest money in this one? I would myself. I'll throw some money and just leave it. Just don't take profit if it does reach here. Just leave it, as a long-term investment. Could be have something like a Bitcoin or something. The Cardano is the third generation. Okay, so Bitcoin is the first generation, Ethereum is the second generation, ADA is the third generation. This currency could have a strong future. Okay, possibly. If you guys would like to know more, you can go to cardano.org, and check and get to know more about it. Okay. Okay, guys, if you would like to know more about Cardano, I would not actually mind right here. You guys here? That's the website for Cardano.org. Okay. If you would like to know more and stuff. Right here, you can see some of the stuff. It's an open source. It's peer review. Okay. The style of it is a little bit different to Bitcoin. Okay, so they run nodes and they don't. Every code does not have to carry out. Every block does not have to carry all the code, so it's not too big, so it's easier. So it's still kind of lighter. So they were able to solve a lot of problems. Okay, so if you go here, see the problem is just keep opening in another page. Don't know why it doesn't open another page. Okay, anyway, so if you guys would like to know more about this, I would recommend you coming here, and there are some cool videos here. Probably good idea to watch. Okay, go through this stuff just to get to know more about the website and the developers and all that stuff, research and stuff, technology. Okay, and the technology of the Cardano, how does it work, the roadmap of it, the research, the open source stuff. Okay, some news and stuff right here. So news right here. How can we bring trust back into financial market with blockchain? Cardano Foundation CEO says blockchain could prevent GME type showdowns native. Okay, a lot more here, guys, if you would like to know more about Cardano. Okay, so I think we should probably jump back to our chart. Okay, I just wanted to share with you, if you would like to know more about it, that's probably the source to know more about the people who are doing this and what they're doing and why they're doing it and the idea behind this. Okay.
Personally identifiable.
That's probably we can share another screen right here. It's not right here. Just bear with me a second. See this, guys.
We're starting to enter into a new.
Basically, one of the developers, Hoskinson, of the Cardano, just explain the idea. How does the Cardano work? How it is different from Bitcoin? This stuff you guys should be aware of. Okay, you can get the whole video. I'm just gonna let a little bit play here to get a quick idea.
Realm, going into the third generation. Where we've realized that Ethereum can't scale to millions of users, to billions of users. Ethereum doesn't really have a good developer experience. Ethereum and all cryptocurrencies have really a bad governance experience right now, where every single time there's a major disagreement, instead of finding a way to resolve it, we end up usually seeing things like Ethereum and Ethereum Classic, or things like Bitcoin and Bitcoin Cash. Furthermore, there are big sustainability problems in the space. Namely, after the ICO money is out for a project that's funded this way, or let's say the venture capital runs out, who will fund to grow the chain? Who will fund to actually build out an ecosystem? These are big open questions. So the third generation is all about three topics. One is scalability. Two is interoperability. And finally, there's this notion of sustainability. So the Cardano project is really our philosophy, our vision on how to solve each of these categories in a way that we feel is going to inherit the best features and lessons learned from generation 1 and generation 2, but also add a lot of new concepts and technologies in the space. And this project is built with some really good principles, namely two. First off, all the science that guides the solutions to these problems goes through some notion of peer review. So we go to conferences, we write proper scientific papers, we engage universities, and all the engineering, we have the goal to eventually implement as high assurance code. Which means The same types of techniques one would see with the Shinkansen or a jet engine, where when the failure of the system results in human death, we can apply those techniques to our protocols, to engineering and development, so that we have a much higher belief in the quality of the code. This avoids events like the DAO, the parity hack, and other such things as we've seen in the space. So let's go through each of these in more detail, starting with scalability. So scalability is kind of a loaded term, and it has a heck of a lot of meanings. But from a cryptocurrency's perspective, you can really think of scalability in 3 different perspectives. So one is scalability in terms of transactions per second. So you'll often hear people say, well, Bitcoin has 7 transactions per second, or Ethereum has 10 or 20 transactions per second. And this new protocol has 200 transactions or 300 transactions per second. There's this notion of how many transactions am I able to get into a block within some finite period of time. But it's not the only thing that you have to concern yourself with. Transactions carry data. And as you get more transactions, you require more network resources. So there's also this notion of bandwidth or network, where for a system to scale, if it's going to go to millions and billions of users, that system could require hundreds of megabytes to gigabytes per second of bandwidth to be able to support all the data flowing through it. This is very common in the enterprise world, but not quite where we need to be in the peer-to-peer world. And then finally, there's this notion of data scale. So blockchains store things, hopefully, forever. And so every time you put a transaction in, regardless if it's relevant or not, it ends up in the log. And as you have more and more transactions per second, you need more and more data. And as a consequence, blockchains will grow from megabytes to gigabytes to terabytes to petabytes and potentially even exabytes. Again, this is okay in the network world, but when we talk about a replicated system whose security model relies upon each node having a copy of the blockchain, this is not tractable for consumer hardware devices. So Cardano, what we're trying to do is figure out ways to solve these problems in a very elegant way. Namely that as we add people to the network, we naturally get more transactions per second, we get more network resources, and eventually we'll get more available overall data storage without compromising our security model. So let's talk a little bit about some of the innovations we've already brought, namely with the throughput. We've developed a peer-reviewed white paper for a provably secure proof-of-stake protocol. Called Ouroboros. And Ouroboros is among one of the most efficient consensus protocols in the cryptocurrency space, and it's the first to actually be proven secure in a very rigorous cryptographic way. The magic of Ouroboros is that it's been designed in a modular way, and it's been designed with future-proofing in its DNA. So, namely, how Ouroboros works is Ouroboros breaks the world into epochs. Take a look at the distribution of tokens, and from a source of random numbers, it's able to hold an election and create slot leaders. Now, these slot leaders functionally do the exact same thing that a miner would do in Bitcoin. So this is basically the same as a person who discovers a block, wins a block in Bitcoin. But the difference is that it doesn't require the extensive computational resources that Bitcoin requires to construct a block. And as a consequence, this system is considerably cheaper to run, even though we still have similar security guarantees that Bitcoin currently enjoys. So it's a major advancement. But the other really interesting thing is that these slot leaders don't have to just maintain a single block and a single chain. They can actually maintain other blocks and other chains. Because the cost of constructing a block is so low, it's actually now tractable to talk about consensus over a range of blockchains instead of a single chain. Furthermore, epochs perhaps could even be run in parallel. So instead of having one epoch run and then another epoch run, one could develop a system using Ouroboros where epochs run in parallel and transactions are partitioned accordingly. What this effectively means is as you gain more users and your users gain more capabilities, these slot leaders will be able to maintain more types of blockchains and also run transaction processing for blockchains in parallel. This is a major advancement. The other cool thing is that Ouroboros has very rigorous security standards in terms of its theoretical foundations as well as its implementation. So as a consequence, as we develop new capabilities for the protocol, these capabilities are somewhat composable, meaning that these capabilities will also be secure. Whereas other systems, one has to prove these things on a case-in-case basis, in some cases make major modifications or changes to their system. In addition to this, we intend on Ouroboros actually being quantum resistant sometime in 2018, hopefully, where when the slot leader signs these blocks, they'll be using quantum resistant signature schemes, so we can get even more future proofing into the system. So that's kind of the first view, is how do we construct a way of maintaining the network that doesn't cost $300,000 an hour, which is what Bitcoin currently costs at the current market rate of $5,000 per coin. And how do we build a system that allows us to go parallel and also allows us to potentially maintain multiple chains concurrently? This is the heart of Ouroboros. Now, as we mentioned before, one of the most important things when one develops new cryptography is to make sure that this cryptography is developed in a very rigorous, peer-reviewed way. So Ouroboros actually was accepted at Crypto 17, where our team went there to present it. And future versions of the protocol continue to go through more rigorous peer review, giving us a high assurance that the conceptual design of the system is correct. The other side of it is we're actually modeling a formal specification of Ouroboros using psi calculus, which is a wonderful formal modeling language that's machine understandable, that eventually we're going to be able to connect to the Haskell code in our GitHub repo and actually show that we've correctly implemented the protocol. This is a standard that actually does not exist in our space, and we're very excited to be the first to bring it to the space. But that's not the only thing required for scalability. You also need the ability to move large amounts of data at the same time. As our network grows from a few hundred transactions per second to thousands, to tens of thousands, to hundreds of thousands of transactions per second, you cannot maintain a homogeneous network topology. In other words, you cannot have a situation where every node has to relay every message, because there will be nodes that don't have those capabilities, especially as they grow. So we're actually looking at a new type of technology called RENA. And this stands for Recursive Internetwork Architecture. And so RENA is basically a new type of structuring networks using policies and clever engineering principles, mostly conceived by John Day, who's based out of Boston University. And the goal here is to build a heterogeneous network that gives you similar types of privacy guarantees, transparency guarantees, scalability guarantees that you would expect to get from network protocols like TCP/IP, but do so in a way where you can actually reason about how the network is going to compose in a formal capacity. So in other words, RENA is a major step forward that will give us a way to very naturally tune and configure Cardano as it grows from hundreds to thousands to tens of thousands of transactions per second, and something that will very seamlessly connect and interoperate with TCP/IP. We're very excited to bring this in part to the Cardano ecosystem in 2018 and completely around 2019. And we think it will be a big solution to a lot of the network overhead issues that we have. Finally, we have this notion of data scaling. So this is among the hardest of the problems, and it's one that we're still examining and looking at. But the reality is that not everybody requires all the data. The transactions that Alice sends to Bob are not necessarily relevant to Eve and Jane and Bill. They're only relevant from the context that these people are able to infer from them the total ownership of the money and know that the tokens they've received are legitimate and correct. So you have techniques like pruning. You have techniques like subscriptions and some form of compression, which when applied in a setting in a very intelligent way, can actually reduce substantially the amount of overall data one user has to have. There's also the idea of partitioning. Partitioning is where a user doesn't actually have a full copy of the blockchain. Rather, they have some chunk of the chain, as opposed to many other chunks. And there's some notion that you can put all of these things together. So one of the goals of the Cardano project is to study this in a very rigorous way and to come up with new blockchain architectures as they become necessary that will allow people to have much smaller amounts of data, but overall still get the same level of assurance and security that the transactions they receive, the computations that are performed are correct. So part of this research also involves some of our ideas about sidechains. And we'll get to that actually when we get to the interoperability section. But as a brief mention, all a sidechain really is two components. First, it's the notion of creating a compressed representation of a blockchain. And it's the notion of creating interoperability between chains, i.e. a way of translating transactions between chains. So some of the proofs that we've come up with some of our recent sidechains research gives a lot of hope that we can create compressed representations of a blockchain as it grows from gigabytes to terabytes to petabytes, and that these proofs can give us a high level of certainty that the transactions we're seeing, the history we're seeing is correct, even though these proofs are quite small, megabytes to kilobytes. So this is kind of our solution to data, is to approach it in both a pragmatic way, where we start restricting in some cases what people see in a very intelligent case-by-case basis. We partition things where and when we can, and we find out really intelligent cryptographic ways to compress history, which give us the same level of confidence even though we don't have all of it, but do all of this in a way where we don't remove the original replicated security guarantee that Bitcoin has endowed the space with. The other fortunate thing is, while TPS tends to grow quite a bit, and network resources also tend to grow quite a bit, storage is still relatively cheap and available. So we believe that the data scaling side of Cardano will be something that we don't have an urgency to resolve until late 2018 to mid-2019. The research has just started at the University of Edinburgh, and we intend to continue it, and we believe we will have our first approaches probably by the middle part of 2018. And eventually have a total solution to this problem by the end of 2019 for the system. So this is kind of the first component. Let's build a protocol that allows us to scale up the transactions per second. So as we gain more people into the ecosystem, we get more throughput. Let's create a network stack developed by one of the early internet pioneers that has learned from some of the issues that TCP IP has in other systems, and is a bit less fragile and a bit easier to configure and tune so that it can handle a large heterogeneous network based upon real-life scenarios. And let's come up with some clever ways of handling the use of data in our system without compromising our security guarantees. And also, when partitioning is adopted, so much like BitTorrent, you actually gain a lot more resources for overall storage. So if we don't have to replicate the database, rather we can distribute it, there is some hope that we can build a large distributed file system for Cardano, and thus actually have total available petabytes of data, even though any particular user only has to have a small amount. So that's the first pillar, this notion of scalability. But the third generation demands two more, and therefore for the Cardano project, we will do these things. First, there's this idea of interoperability. So interoperability is this idea that there will not be one token to rule them all. So sorry, Bitcoin. You're going to have many networks like Ethereum and Bitcoin and Ripple, and legacy systems like traditional bank networks running on older protocols like SWIFT and older settlement networks like ACH and so forth. And these systems all speak their own languages, and these systems all have their own business logic and rules. So currently, as it stands, it's very difficult for Ethereum and Bitcoin to understand each other. Substantially more so for the old banking networks, which have the added requirement of metadata and attribution to the transactions. So the problem is that if you don't have a single standard, and if you don't have a canonical way of communicating with these systems, then you run into a situation where value gets very fragmented. So regardless of how decentralized any one of these particular ecosystems happen to be, the kingmaker will be the small on and offboarding hubs that control the movement of value between these systems. Currently, we're seeing those as exchanges, but there are others who could come, and these exchanges are very fragile. They're subject to being hacked, they're subject to draconian regulation. Occasionally they get shut down because of unwise regulatory policy, or in some cases wise regulatory policy. And this is really not a good situation to be in for a supposedly decentralized, permissionless ecosystem, to have a small group of actors control whether one can convert their value from one system to another system. Or when people do business in this world, if these businesses are regulated or even semi-regulated, they usually do have to interface and interact with the traditional financial world. For example, let's say that you're a cryptocurrency company and you issue an ERC20 token. Okay, so that ERC20 token, let's say you have a crowd sale and you raise millions of dollars worth of Ether. And as an actual company with a bank account in a legal jurisdiction, you begin selling that Ether and deposit millions of dollars into your bank account. Well, then, bank is a regulated entity, and the first question they're going to ask is, where did you get these millions of dollars from? And the bank will then ask you to explain, to provide some data and details. You'll say, oh, well, I had a crowd sale and I sold an ERC20 token and I got a bunch of Ether. And they say, okay, well, who did you get it from? Who are your customers? And you respond, people over the internet. And unfortunately, that's really not a good answer. And this entity is a regulated business entity that has to file suspicious activity reports, that has to deal with people on their side, like the Treasury Department or maybe European Union and so forth. These entities feel that this is a very risky proposition. And this is the unfortunate reality that we tend to live in our world. We have fragile interlinks throughout cryptocurrencies as well as the legacy financial system. And there's really no way to escalate transactions in a very natural way so that when one wants to do business with the legacy world, that metadata, that attribution, the compliance information that one would want to have is not present. And as a consequence, anybody doing business here automatically becomes a high-risk business. This is an unfortunate situation. So the idea of a third-generation cryptocurrency with respect to interoperability is a cryptocurrency that has the capacity of being able to understand and watch other cryptocurrencies. A cryptocurrency that, when it sees Ethereum and an event occurring here, can actually verify if that event is true or false. For example, if Alice says she has Ether and sends Ether to Bob, this cryptocurrency ought to be able to actually know that that's a legitimate transaction if it's something in the concern of the third generation cryptocurrency. So cross-chain transfers are reliable, and they should be able to do this without needing a trusted third party. That's the single most important thing, because we want to create an internet of blockchains, an internet of value that flows around just as easily as Bitcoin flows around or Ether flows around. We want to move cross-chain. So the first component of that is to have some notion of sidechains. Now, this is not a new idea. Atomic cross-chain swaps or sidechains, these things have been around for a long time. They've been proposed since as early as 2012, perhaps even sooner. But the basic concept is that there is some way of structuring information from one chain to another chain such that when a transaction is sent, that compressed structuring of information gives you the ability to know if that transaction's legitimate or not. In other words, the person sending it to you actually has that value, and also this value is not a double spend. It's a very important concept. The other side of it is that you have to have the ability to do this in a very compressed way. There are over 1,000 cryptocurrencies in use, and cryptocurrencies are becoming larger and larger. So you can't say, well, the only way to understand the other system is to have a copy of the entire blockchain of the other system. This is not a scalable solution. You have to be able to look at these systems in a very compressed way. So Cardano has started its sidechains effort. We recently published a paper with Andrew Miller, Dionysios Zindros, and Agos Gasis. And this paper contains a very well thought out approach for how to generate proofs in the proof of work world, called non-interactive proofs of proof of work. And we're very hopeful that this approach can also be adapted in the proof of stake setting, and that these two things together, combined with some clever engineering, should allow us to have a pretty deep and detailed understanding of what's going on amongst other cryptocurrencies which are here to stay. However, this is only part of the story. Even if we can create a utopia where all blockchains can talk to each other and be seen and heard, and they go from blind, deaf, and dumb to very intelligent and verbose, the issue is that this world is still incompatible with this world, principally because of three factors. One is the notion of metadata. Two is the notion of attribution. And three is the notion of compliance. So, metadata is the story behind a transaction. It's not that you spent $50 that matters. It's where did you spend it? What did you spend it on? To whom did you give it to? These types of things. That's metadata. It's really not well provisioned in the cryptocurrency space. However, it's the bread and butter of the legacy financial world. There's an enormous amount of value in the metadata of transactions. And in some cases, the metadata of transactions allows transactions to be put into a hierarchy of risk. Certain types of transactions are tremendously risky. For example, if there's a wire transfer between two American banks based in New York amongst large companies, this is very common and happens all the time. If there's a wire transfer from a small American company to a small Russian institution, which in turn then goes to Iran, which in turn then goes to South Africa, this is a totally different scenario. Even if the amounts are the same, the amount of hops, the people who've touched it, the nature of the organizations, how long they've been doing business, this is all metadata. The problem is that metadata is incredibly personal. It's incredibly private, and it has a big difficulty in the cryptocurrency space because all the transactions here are permanent. They live on a blockchain. They're transparent. And the minute that we would attach metadata to a transaction here, we'd run into a situation where we could be potentially exposing very sensitive information to the general public. So one of the goals of the Cardano project is to figure out where, when, and how we can put metadata on a blockchain and benefit from some of the factors that we really care about, such as auditability as well as immutability and timestamping. Because tampering with metadata is a very risky thing. It's very important in cases to have this, but at the same time, posting metadata to a blockchain in a responsible way, perhaps encrypted, or perhaps with a special scheme that only allows certain people to see it, whereas others cannot. Attribution is about identity. It's about the naming of actors involved in the transaction. It's a subset of metadata, but it's so important it deserves its own consideration. It's not just good enough to know the story behind the transaction. You have to know where the money came from and where the money's going. That's Alice to Bob, JP Morgan Chase to Wells Fargo, and so forth. This is so incredibly important that we've decided to try to construct a way where if one desires to add attribution to a transaction, it can be done in a pretty streamlined and easy way. But the difficulty is establishing a web of trust or some sort of identity hierarchy. One of the reasons why we live in an internet with passwords and usernames is because we actually don't have a good way of identifying the people on the internet. It would be great if everybody had a public key and there was an easy way to distribute these things and an easy way to verify that Bob's public key was actually Bob's public key. And this was one of the goals of the PGP project. It was never realized. As a consequence, the second consolation prize that we've had to deal with on the internet has been this terrible dystopia where one has a username and a password, usually easy to guess, usually easy to hack, and usually reused amongst many different websites, and causes certainly a lot of problems. So the same problem there is incumbent here. The difference is that cryptocurrencies are factories for cryptographic credentials. They give you a place to store public keys, they give you a place to store a web of trust, and a whole bunch of cryptographic mechanisms that go above and beyond what one would see in a normal website. Cryptocurrencies are basically factories for cryptographic credentials. Unlike normal websites or unlike the current internet, cryptocurrencies give you the ability to organize, manage, store public keys, and develop all kinds of webs of trust, as well as an even more advanced layered cryptography, which has been invented over the last 20 years. So part of the goal of the Cardano project is to start exploring how we can use these things that we're currently using for storing and saving our money to actually also identify ourselves when and how we want to do. And the hope is that this can then be used when people are required to give attribution to transactions. For example, perhaps when they send value to an exchange or back, they can do so in a very graceful and easy way. Now, the final component is this compliance component. And compliance is a construction of things like KYC, which stands for Know Your Customer, and things like AML. It stands for anti-money laundering, and things like anti-terrorist financing, ATF. And basically, they're all the same notion of there's a transaction that's occurred. What do we know about this transaction such that we can say it's a legitimate transaction? This is something that is not really considered in the crypto world, but it's the bread and butter of every single financial institution, whether they're an exchange, they are a bank, or anybody who's in a position to be a money service business where they're handling money on behalf of somebody else. There's very harsh and strict global regulation and standards for how anti-money laundering and know your customer and compliance needs to work in general. So, with respect to this, our hope is that we can find a healthy balance where once we've distributed these cryptographic credentials and once we have provisions for metadata, that these two factors can be put together in a very creative way on a case-by-case basis and a voluntary basis, so that when somebody in the crypto world wants to do business in the legacy world, they have an ability to escalate the transaction from a standard cryptocurrency transaction to one that a bank would actually recognize and feel very comfortable with. For example, the scenario that we gave in the beginning of this presentation about this ERC20 token crowd sale, one could entirely imagine the idea of saying that the only way one can send Ether to this transaction would be if it's stamped with some metadata accessible to the person being sent to, and it has some identity information that's transitive such that when they cash out and go to the bank, they can disclose that to the bank. But the key here is doing this in a way that protects privacy and doing this in a way that doesn't necessarily make people custodians of the data. As we've seen with the Equifax hack and other such things, custodianship of personally identifiable information is quite problematic. So a big goal of the Cardano project is to explore this side of the space using new cryptography, using optional metadata, and also using things like trusted hardware, for example, which give us all kinds of capabilities, from very secure ways to store credentials to the ability to provide guarantees that data has been destroyed after a period of time, to things like geotagging, for example. So this is the interoperability side. And if we're successful with this, we can really think of Cardano as that glue that can facilitate the internet of blockchains, where Bitcoin can stay Bitcoin, Ethereum can stay as Ethereum, Ripple can stay as Ripple, and the banks don't have to change much, but Cardano provides that necessary bridge that isn't centralized and isn't fragile. Rather, it's a large decentralized network, and it really ushers in this great new era of interoperability. In the last two sections, we talked about scalability and interoperability, respectively. But the third pillar of a third-generation blockchain, and what Cardano aspires to be, and probably one of the most important of the three pillars, is this idea of sustainability. And you could break sustainability into two components. First, there's the idea of how do we pay for things. So cryptocurrencies are not companies. Even if one is to say a cryptocurrency or a token is a security, it's still somewhat decentralized. It's still infrastructure. It's much more like roads. It's much more like TCP/IP. They're protocols. And so when you talk about a protocol that's open source, the idea is to minimize the operational cost of that protocol. So things like putting tolls on the protocol or intellectual property on the protocol, even if it's well intended, for example, to fund a foundation, are likely to be less competitive than completely open, completely free protocols. So as a consequence, it's very difficult to figure out exactly how one ought to maintain these systems, pay for these systems in the long term. So certain proposals, such as a patronage type of model, where a corporation decides to volunteer its developers, may work in the short term, but the challenge is that those developers end up having a huge amount of influence over the evolution and growth of the system. So one can argue that a patronage model will lead to centralization of power into the hands of a few companies that want to modify the protocol in a certain direction. For example, right now, the W3C is having a large debate about bringing DRM into the browser. And we've already seen the EFF resign from the W3C because they feel that larger companies in that effort are influencing this process towards the benefit of large content distributors as opposed to a free and open web. So patronage may not be the best way. ICOs are also an interesting way, and they're like a quick jolt of energy. They provide a lot of capital, and if there's good governance behind that capital and good people behind the capital, certainly can result in the creation of a great product, great protocol. But the problem is that an ICO is an indefinite event or a continuous funding event. Rather, it's a large flood of money in the very beginning to do something. But no matter how large that pile of money is, it's finite and will eventually run out. So the first thing is, can we construct a system that has a treasury? A treasury is where a blockchain is able to print money and put some of that money into a decentralized bank account. And that decentralized bank account is funded through inflation. So the first to pioneer this model was Dash. If you look at Bitcoin, every time a block is produced, it started with 50 coins per every block, and then it decreased by a factor of 2 every 4 years, and now we're down to 12 and a half. All of that goes to the miner. With the Dash model, instead of having all of it go to the miner, some of it actually goes into this decentralized bank account. Then there is a democratic method to vote on funding proposals. So what Bob can do is Bob can submit a ballot to the Treasury. And then the token holders can vote. And if there's a high enough threshold, if there's a high enough amount of voting, Bob's ballot will be approved and the Treasury will open up and pay Bob. So this abstract model is actually incredibly robust because it has a way of being refilled on a continuous basis. It's directly proportional to the overall influence and size of the currency. So as the currency grows, it has more and more resources available, which in turn can be spent to grow the currency. So there's a positive feedback loop. And also it has a democratic process, a democratic participation connected to the system that allows the stakeholders in the system to start having discussions about priorities, namely what ballots ought to be funded. For example, Bob can say, I'm a developer and I want to sustain the system, and submit a ballot. And then Alice can say, I'm a marketer and I want to market the system and create content videos. And now the token holders get to choose, what do they think is a higher priority? Further development or marketing? Or perhaps a scientist wants to write a new protocol to improve the existing protocol. Maybe it's a new privacy primitive, for example. Or maybe it's a bit more security with the network stack, or a bit more anonymity with the network stack. So instead of going to the National Science Foundation or the European Union and trying to get a traditional research grant, scientists of the future may even be able to use the Treasury model to propose funding for research. Or perhaps you're an application developer, a dApp developer. Maybe you want to bring state channels to Ethereum. Under the current model, one has to do an ICO or something along those lines, issue an unnecessary token that really doesn't provide any utility above and beyond what Ether provides, but do so to raise capital in order to be able to bring this innovation to the system. Instead of having that segregating value away from the principal token, the token holders now have a mechanism where they actually can provide funding for this dApp. And that's a really exciting proposition. The challenge, however, is that the construction of such a system is a tremendous endeavor and requires quite a bit of deep thought. First off, there has to be a proper and fair voting system. Second, there has to be incentives to vote, incentives to participate above and beyond some notion that this system is going to be a common good. There's a kind of a tragedy of commons notion there. Third, there has to be an easy way to submit ballots, but do so in a way where ballots actually, the reasonable ballots, have higher precedence and priorities over absurd ballots. And do this all in a way that's completely decentralized, and do this all in a way that is somewhat distributed and doesn't require centralized governance. So a treasury is quite hard. Dash had a first example of it, and they've had tremendous success as a project, as a consequence. So at IOHK, we are quite interested in this model. We think this is one of the single most important things about sustainability, because it's leaving something behind embedded within the system itself that allows the system to pay for its own bills. Yet, it is, as I mentioned, quite a bit of research. So we've already started the process. We first started examining the voting system, and we're looking into using a modification of liquid democracy. And then combining that with an incentivized treasury model, that we have developed with a joint partnership with researchers at Lancaster University, as well as some of our personnel that come from Ukraine. And our hope is to develop a reference treasury model that's abstracted from any cryptocurrency. It's just a module that can be plugged into a cryptocurrency, such as Ethereum Classic or Cardano. The hope is that the system will have a fairly sophisticated way of balancing the needs and incentives of token holders, as well as the needs of those seeking funding in a reasonable way. Now, this is an inexact science. It's one that requires quite a bit of iteration, and this is why we're trying to construct this system in a modular capacity so that the treasury system can be upgraded independent of the protocol itself if necessary. So this is something we're very excited about. We should be publishing a paper fairly soon, probably in Q4 of 2017, and our hope is to roll out the first generation of the reference treasury model into the Cardano protocol by about the middle part to the end of 2018. Depending upon how long the research takes. But there's another side to sustainability. It's not just about how do we pay for things. It's also about where should we go. This is an even bigger meta question. So, cryptocurrencies are living creations. They're not static in that once you've written the code, it's finished, it's done. There's no notion of 2.0. You have to be able to change them as technology changes, use cases change, or new innovations come out that you can benefit from tremendously. And generally, you do this either with soft forks or hard forks, but these are forks nonetheless, meaning that you have to change something. The problem is that in current cryptocurrencies, generation 1 and 2, there is no canonical way of deciding which fork is proper amongst many that have been proposed. And as a consequence, this results in a situation where eventually irreconcilable differences develop and we see the chain break apart. We've seen this with Bitcoin and Bitcoin Cash. We've seen this with Ethereum and Ethereum Classic. And it will only continue as these systems grow in scale and value. So what we have to do is argue by analogy, are there any social systems that humanity has constructed, which while they may be controversial, have still maintained a degree of stability and updatability? Constitutions are the closest notion that we have. It's the highest law of a country. A constitution doesn't change too much, especially constitutions like the American Constitution, and they're somewhat difficult to change. But when they do change, there's universal consensus post-change that they're going to follow this. We don't see a fracturing of the country into two Americas or two UKs or something like that. We kind of get consensus around it. Why? Because it's a slow, deliberate process, one that people agreed to follow, at least in principle. So if we were to treat protocols as constitutions, one ought to be able to amend the Constitution. One ought to have a process to do so. Because we're engineers and we like reusability, our hope is to use the very same types of mechanics that are used in the Treasury system for approving ballots to actually being able to consider Cardano improvement proposals. So Alice or Bob, the developer, can propose a SIP, and then there's going to be a process which Alice and Bob can follow that allows the network to vote systematic, deliberate process that takes time and effort with increasingly higher thresholds prior to eventual adoption. Now, the first generation of this technology is more about process and mechanism. It's a meta consideration that lives outside of the network, but relies on tools within the network. For example, the ability to do voting by stake weight. Later versions, we're going to explore the idea of converting a Cardano improvement proposal into something that's machine understandable. Similar to a formal specification of a protocol, there is this notion that maybe we can actually specify a cryptocurrency in a way that the cryptocurrency actually understands its own design. If this is possible, then it may be possible to actually verify if a client is following a specification. In other words, when Alice and Bob create their wallets to connect to Cardano, there's this machine understandable canonical notion of how Cardano ought to be configured. And their clients will actually be able to self-accredit and verify if they're actually following the protocol or not. So this is kind of generation 2 and 3. This idea of taking a social process and eventually mechanizing that social process in ways that give us a protocol that lives above the particular software. And we're very hopeful that we can use emerging techniques from programming language theory and formal verification to pursue these ends. So the first micro examples of this are going to start materializing with the formal verification of smart contracts, which is a very important topic for reducing bugs and ensuring that smart contracts are stable and reliable. And this is an area of research that we're pursuing very vigorously at IOHK, and we intend on having several publications come out throughout 2018. Our hope is that those techniques can then be raised a level, and we can begin having protocol level descriptions of how Cardano ought to work as a full cryptocurrency stack. And then eventually we can pursue formal verification that clients are connected to a process as it upgrades and iterates the Cardano protocol. And once our treasury voting system is in place, we'll make special accommodations so that every Cardano improvement proposal can eventually go through a process of voting with higher rigor on hard forks and less rigor on soft forks. But nonetheless, there's still some notion of this. We already have an upgrade system built in, and if one goes to Cardano docs, there is a specification on cardanodocs.com for how that system works. And later on, that system will be superseded by our new voting system that we intend on rolling out with the Treasury. So this is sustainability in a nutshell. It is our view on how we should responsibly pay for things and our view of where should we go. As protocols start, there's usually a lot of founder vision and a lot of initial philosophy, but as more people come into the ecosystem, as more hopes and dreams get invested into the ecosystem, eventually these ecosystems grow beyond their founders. And so it's incredibly important to have a process for changing the protocol in a very slow, deliberate, methodical way that's as inclusive as possible and as resistant as possible to any particular power broker's ability or machinations. So that's Cardano. Cardano is a third generation protocol. It's built with peer review. It's built with high assurance software standards. It's built in Haskell, my favorite programming language. It's built by a large international team and are very well funded, and IOHK is committed to it until 2020. And it's built to be sustainable, interoperable, and scalable. Our view of how do we get cryptocurrencies from the first million to the first billion. Thank you so much for watching, and I hope to hear from you guys soon.
Okay, guys, so we've had a really nice talk from Cardano developers. So I'm in love with this currency, so I hope it will not disappoint us. I hope we can see a future for it, big one. I'm just fixing my mic right now. It's just tangled around. Okay, guys, if you want to invest a little bit in this one, it will not harm. Okay. Okay, guys. So you've got the USD, USDT. If you want to throw a little bit of money in it, it's probably not bad. The field is going in a correction, guys. Okay, so DOT, guys, is one of the good investment. It's in a correction right now, but for longer term, probably is not bad. Okay, so that's DOT right there. Okay. This is bad. Uh, oh. That's another one, guys. BAT USD also. It's only $1 right there. Okay, has been growing steadily. Came almost from nothing there, so it's not bad, I guess. Hot is growing lately, guys. So H2ET. Okay, that's another one to keep the eye on. The HOT also. I've got some recommendation to buy the CHZ, guys. Okay. So that's one of my friends said it's really good. Just to let you know. Okay. If you want to invest a little bit in it, it's your choice. Okay, guys. That's another one is going crazy now, guys. It made a really nice candle. If you want to shoot it with one buy right there, it's probably not bad. Has been going really crazy. Okay, that was a nice correction. It's just trying to break this previous correction right there. I mean, don't know why is this doing that with me. Oh, let's do it a minute. Okay, guys, I would buy this one. So that's RVN. Technically, it looks good. Okay, technically, it looks good, guys. Okay, so probably going, and that's really cheap. It's only 0.2 of a dollar, so you guys can catch some movement in this one. But like, try to trade actually real stuff. Okay, see this guys is trying to push it. It's this support became a resistance. Let's talk technical a little bit. See that support became a resistance, right here. This one, try is like building. Big investor did buy, so now it's the big investor is holding his money. When he buys at 0.17, he's not gonna sell right here. I think so, unless he's just a scalping. So now it's just shooting up. What's the capital market cap in this one? Is holding more, right? Start moving up, right? It's already 9% today. The Rebel has been having problem lately. The US government is just cracking down it. The volume trade is 228 million, so it's got a little bit of money in it. Okay, it's not so big, but something. So we're trying to catch a little bit also cheap currencies, so we can catch a possible opportunity, potential opportunity. So we have Osco saying here, wait for it to dip a little bit. You know what? It's really cheap. It's only like 23 cent, cent and stuff. It's not really expensive. So if you buy for a little bit longer time, long investment, you hope it would go 20 or something. It would not make much difference if you wait or not wait. You know what I'm saying? I would wait if you scalp in something trading Bitcoin, but that's for investment, so it's a little bit different story. It's like. That's another one is just to break in the correctioner, the Matic. Okay, guys. This is also cheap. Did break above the correction wave. It was making a wedge right here. Okay, so this possibly is not bad. And that's coming from nothing. See that, guys? That's new, and it was really nothing. See this one? So this one is potentially good one. See, that's good. And this corrective wave probably, let's say if it's from here to here, how much in the Fibo levels? Probably 50%. It's even less than 50, which means a stronger trend. Yes. So this is mathematic right here. Possibly this could go, and it's really cheap. It's only each dollar will get you 2.5. That's a very, very cheap, guys. Okay, that's really cheap currency. It was launched at almost zero, and now see it's going really nice. Now it's building a nice candle. So if you want to invest, also that's really cheap. It's only 3 out of 100. So $10 you will get all of it, I guess. It's not bad. So that's something to keep the eye on. So that's STMax. So this has a potential, okay? That's also good. But it's $16 now. But I think it started going back up right there. It's starting, looks like it's finishing its correction right here. So it's really cheap, so it will not harm. After launching, it did just crash. Well, if you're gonna hold it for future, it's not gonna harm. It's really cheap, so I guess it's not gonna harm you. It's not costing you anything, I guess. Well, why did you sell it then? Just hold it. Why do you have to sell? If you're not buying CFD and you don't have leverage, which I really recommend you guys don't, like, have an account which is long-term investment. You throw money in it and just leave it, and have another account for trading safety and stuff. So this way, get the best of the two worlds. Okay, that's nice. Okay. CKB. That's a good one. This is looking very good. I think that's a very good investment, guys. This CKB right there. That's looking like a leading diagonal right there. So I think this is just gonna shoot up, hopefully. And that's also not expensive. So if you put $100, you're gonna get a lot of it. Okay, guys. Okay, guys, this is the cheap, and looks like having some movement recently. Okay, so something to keep in mind. Okay, guys. Okay. Guys, the uni is just picking up a lot. Here, $30. That's a big move. See this from here to almost You know, that's going crazy. That's probably good. Link, guys, is good. Bye. I need to go link is the. I think link is good investment long term. Okay. Link is going in triangle right now. Okay, so that's like an A, B, C, D, like this triangle. Then we're gonna shoot. So the next target, I think, would be this will break to the upside from here to there. According to this one, you take this target. Possibly the next target is 44, 45. Okay. I think we're gonna break to the upside here in link. So link. I think link is a buy for a bit. You know, that's very clear triangle right here. So there is holding. They're getting more. They're not gonna be another correction after this triangle. I think it's gonna be just a breakout. I don't think it's gonna break down, but either both cases available. So just it will not harm to get a little bit of something. This also, guys, has looking good. It's FB, so it's not bad. Also at $2. Did go to almost 4.5. I did make correction to 1.45, so that's about 38, and start going back. You can see the 4-hour candle here start rising. So this correction is about 61.8% right here. After this, see this. So after this is more volume right here, breaking above here, and the 50% is just going up. So it's not bad to watch it as a B or buy some. Hey guys, have a little bit of money and just throw in here and there. It's not gonna hurt. We're just going through what potentially could be a good investment. You never know, maybe one of them will just shoot up like crazy. So we have this 1 inch also, guys, is just going up really nice. That's a very bullish correction right here. Crazy bullish. I think we're gonna, that was like a double. That was like a double three, possibly flat correction followed by a triangle. So that's it. That's nice. Okay, guys, you can see that was a triangle and that was very flat. I would recommend this 1 inch USDT. Just buy some of it. It's not probably bad. You can see very bullish right here in the 4-hour time frame. You can see also this is making higher highs a little bit, higher lows a little bit, which is good. Okay. This high, of course, this correction. So that's like a normal, like an A, B, C, D formation. Just A, B, C, D and stuff. So that's okay. This flat was expanded. So this is a correction. This is not a new high. Was above this one, which is fine, no problem. And then we come to a triangle right here, and this is going up nice. So I would invest in this a little bit. The percentage it's your decision, but I would say this is possibly could end up, and that's still for dollar. So it's not bad, I guess. Hey guys, nice correction. That's a double combination, a double three combination. Mhm. It's very, very bullish now. If you see in a smaller time frame, you're gonna see this going crazy. But this is nice because this correction was only 50%, which is very good. So if this will work to be an ABCD, then we're gonna get a really nice move. So guys, you can see it was very, very strong since its launching. So if that was an ABCD formation, that's one move. So you're gonna get here. And if you get the 161, so that's probably $9 right here, possibly. Okay, best luck for this one. Congratulations, I guess. Also by Cardano, I think. I think is not bad by Cardano. Okay, so possibly if this work to be A, B, C, D, okay, guys, just gonna remove everything right here. So basically, if that was like A, B, C, then we get a D. So we're looking at about $9. So that's possibly we're gonna get this wave right here. Okay, about if this will extend to be 161 of this one, and that was $6. So the second wave, if it will extend from 3, so it'll be about 10. So we'll get that to the 13 right here. Okay, hey guys. So if that's this is if we get a regular wave about 9 right here, that's first target, and that's second target for this wave only. Okay, so that's wave target is not the currency target. Okay. So that's 9. Yeah, that's nice. That's probably good. Okay, guys, so we're done with this one. Okay, guys. So that's the target. If you want to save this one, that's nice. That's good. Best luck, Pascal. So if you guys want to save this one, take a photo or screenshot or something. See how it goes, and you can let me in the comment in the future. How did this go? Okay. We have this Zell. This is going nice, guys. Lately, it's not bad, and it's still very cheap. So I would buy a little bit of this one. It did make a correction here, and it's like bang, and it just you can see start moving back up. So just give it a shot. Maybe it will end up being something good. So that's right there. Zell. Yeah, that's a good buy also. Has a potential, and it's very cheap, very cheap. Never know. May end up being something, you know. Maybe you may end up buying the car you like with this one. You never know. But if it does, just don't forget to take me for a coffee or something. Okay. So that's something to keep the eye on. That's also another one right here. I'll go. Hey guys. This one has the potential to go, guys. You can see most of them like arc pattern, guys. If you're aware of it, how it does it, just you get a big move followed by 61% correction, then you go to 23. Okay, that's an arc wave. So that's basically an arc. Okay, pattern. So if you measure this from here to there, you're gonna find the correction 62, then you're gonna find a wave to 23. Then after this, we can get to break to the upside. So that's the 62 I talk about right here. Okay. So that's the 62 level we mentioned, which is this one right here, 62%. Okay, because that's an arc pattern, right? So that's a like bang arc, then 62 correction, then this move probably to 23. Okay, after this probably we're gonna continue breaking to the upside. But anyway, when you get just a strong move, you would be expecting the correction to go down 62. So if you get an arc move and you want to buy, you should wait to the 62% correction and just buy from there. Okay, just an idea. So that's I'm gonna type it here. I'll go. And still very cheap, guys. So I'm gonna harm. Thanks, Oscar. So just let's look at this one. Let's see this arc pattern, guys. So this looks like it got even more than the 62% correction, but it got to the 78, which is okay. But still, it's the same idea. It's still an arc, but it was a little bit deeper correction. Okay. So basically, you've got a big wave. It did make a strong correction. And after that, it goes back to the 23. Okay, before it decides what's going to happen after. So after it can come down or go up, it depends on the trade, but that's the pattern. So strong pattern, okay, followed by 62 correction. And this has no correction in it. It's just very, very vertical line, very strong. Okay, then followed by 62 correction because profit taken will shoot up here. Very crazy. That's why it brings back 62. In this case, it did bring it to the 78.6. Okay. But since then it's just building, okay? So you're getting this low, higher low, higher low, higher low. It's building, okay? So once it gets more attention and probably break this high, then I think it may go faster, okay? So for investment purpose, you want to catch the cheap one, okay? So that's possibly may end up being good. So just the CTSI, guys, CTSI. Keep buying it. This, could be something. Alpha also has been going okay. So the same channel, same story, guys. Arc right there. See, you've got this one, 62 correction, same story. Arc 62 and back should reach here before we get further correction. Okay, so that's an arc. See, that's the 62 level right here, 62 level. Also, this did make double bottom right now. See, double bottom right here. So that was also nice reversal. Okay. This it's still in a correction wave, but potentially may end up being something good. And it's very super still cheap, $1, 1.7 right now, but still cheap compared to something worth $20 or something. Hey guys, so that's something to keep the eye on also. That's the alpha. We've got this one. It's like crazy, unbelievable. At lunch and day, it did go to 2.79 all the way down to from one, then it did settle right there. Let's measure this is much lower than that's probably this one. Yeah, just the same story like the other one, right? Oof. This is the one, yeah. This BIFIB. Yeah, see, we want to move from the idea of investment to idea of gambling. I would call this is the gambling one. I was like, what the heck is this? There is no good potential investment when you buy something at 3,000 and it may end up being, 500. So the chance of this is going down is 50-50, right? You cannot say it's going to go up for sure or down for sure. So let's say you buy one here at 3,000 and it goes to 50, you lost 2,500, right? But if you throw money in the cheap ones, which is less than dollar or $1, what's the worst case scenario? If you put $200 in it, you're gonna end up in one of them to zero. It's not a big deal, But getting into this one, I think is just you can scalp this one in something. If it's volatile, it's good for scalping. So go like this and scalp it. Scalp every bar. You know what I'm saying? So you can scalp buys right here. Make it stronger. Okay, so you can just scalp. This one will be really good for scalping. Okay, and you need to decide. Yes, that's what I'm saying. The difference between investment and trading scalping. This volatility means good for scalping. Cheap means good for investment. So I agree with you. So of course, that's really clean chart for scalping. You can scalp this one very clear. Okay. So That's even more volatile than Bitcoin, I guess. 3,200 to like percentage wise. Okay, percentage wise, that's not bad. Okay, so that's BIFI. That's probably good. Okay. What I'm saying, good for trading is not good for investment. Like buy and sell. We're looking for cheap stuff, so some people can afford to buy. Uh, Go back to the candles. Yes, yes, I agree with this. See, that's another one, guys. It's $11 right now. See this big move. Uh, it settled back down here, and there's like a bank. It reached probably 23. This potentially, this let can end up being good. You guys keep buying it. Because what's the chance if this is going 10 times higher? It's 3,000. So to go to 30,000, you get 10 times, multiplied. But if you get something really cheap and you get multiplied 100 times or 1,000 times, you make a lot of money. Okay. Okay, guys, so that's something. That's also another one. You can keep the eye on. Did make a nice correction here. Just shy of, just a little bit below 61, start moving back up. That's possibly could be something, guys. That's a BZRX. Okay. That's another cheap one, guys. I'm not quite sure. Okay, remind me again if whatever I say. Maybe I meant to say the same thing. Uh, yeah. So this one, guys, is not bad. It's just cheap also. Okay, this PLZ. There's one cheap one. This one is really cheap, guys, if you want to throw some in it. Just already shifted. If you can tell me which one is it? So this also, guys, if you want to just, you know, this may be going down a little bit first before it goes up. So this may come down a little bit before it goes up. Okay, so okay. This one here in the correction phase after such a big move right here. So if you know, if you want to buy a little bit, at least when you buy a little bit, guys, what you do is you keep it in your wallet and you watch it. So when you start seeing it's moving, then you can jump in it and buy more. I use this strategy when I like to trade some stuff. I will just buy a very, very small amount in my account, either it's Forex or whatever it is, then I will just keep the eye in it. It doesn't matter if it goes up or down, I just keep the eye in it. So I will be buying, let's say, one share or like a mini lot size and keep the eye. If I see it going deep down, then once start reversing, you know, then I will jump in it back and buy from a lower price. If it's going up, it did break like, you know, a resistance or whatever, then I will be buying more. So that's a strategy I use. I buy very small amount of things. It's like my watch list, but I buy stuff. So when you buy it, it's in your wallet. You keep checking every day, or you know, every probably you guys check every 5 minutes. But that's I use this one if it does work for you guys. That's another one. Another one is still cheap. Okay, guys, if you want to invest a little bit in this one, that's TWT. Okay. That's FLM, guys, right here. If you want to keep the eye on this one also. That's a good one, guys. NULS. So that's the next one. That's structurally very good. Like structure wise, that's nice structure. You can see this support turned to be a resistance exactly right here, okay, guys, which is given a really nice indication. Okay, and this is a double bottom right there. See this one followed by this one, and we have multiple candles after each other, and it's still cheap. This is only less than $1, so probably I will throw a little bit of this one, this NELS USDT. Okay, guys, so that's probably not bad one. Okay, guys, so you're done with this one. That's still very cheap, guys, if you want to buy some. Or if you want to buy some of this, just a small amount, it I think is not gonna harm if you keep it. STX, this one. Uh, this one also doesn't look bad. Technically, also structure-wise, this could be potentially something. It's very cheap. It's only 0.27 of a dollar, so it's worth you know. That's also, guys, is not bad. It's very cheap stuff. I'm trying to get the cheap ones, guys, so it's everybody almost can afford to invest in it. So this is RIF. Yeah, this like with your schooling, keep your social distance, stay away from girls. Okay, so that's RIF. There is RFI, request for information. So that's RIF, guys. There's some stuff in the Binance. That's HOT, BNB. It's probably not bad. Okay, guys. There is Myth also. This one I think is good, guys. Is worth to buy. Structure wise, look very good. Okay. So that's some investment ideas, guys. That's IQ. It's super cheap if you want to invest some in it. I think it's not gonna harm. That's also STMX. I think it's not bad to throw some money in it. That's bad. Wait this correction to finish and maybe. That's FET looking good, structure wise and technically. Okay, that's very bullish and very nice. Possibly after this spending time correctionally right here, uh, it's gonna continue going up, but this need to finish this correction first. Okay, so this correction need to finish, and also still cheap, so it's not bad. After this, this will extend to be a strong move. It will go to 2.77. Okay, guys. So possibly we continue going up to 2.77 if this is gonna extend further up. Okay, guys. If you guys would like to jump in some of the see what's going on in the market right here, dollar index. I think the Feds should take it up one wave up to make a higher high above this one. Okay, and they probably will drop the stock market. So a second wave here, then fall down. Uh, the bonds still going down. Investors are keep selling bonds, so the yields are going up, which is not very good so far. Okay, guys. The VIX index. I think we're gonna see a wave up with the Feds. Gold rising as, of course, the dollar index is moving and the yields are going up a little bit, which is crazy a little bit because when you see the yields going up, right here, the gold should be going down. But also the dollar index is kind of not decided. But see, this is not right. Something's gonna happen, you know. Oil was a good sell. We took some sells from here. I think DAX, guys, is a good sell if you're into DAX. Correctionally, I guess. Okay, we expect a correction here. This is failing to break the 33,000 level. This 80, okay, okay, guys. Uh, that's probably gonna continue being bullish. If you're asking about this ADA USDT, okay, let's say game stop here. This is the big damage. Uh, it's probably more for a sell. Okay, guys, that's in the MACD for our time frame is given a sell signal right here, and the 2 hour also. So it's probably for a sell. Okay, so I'll be bearish in this one. I will be bullish. This probably is gonna come back all the way here. We can see a move toward 75 very fast again. So I'll stay bearish in this one. Okay. So this game stop possibly going down to 75. Well, that's still looking good, right? Because we didn't go. Let's see what happened. I'm just talking technically right here, okay? So game stop, I think, is gonna go down, not up. Just technically looking at the chart, seeing how it's reading. So we didn't break this low, so it's still good right here. Okay, it doesn't matter if we come below this one. So possibly very soon we can see an up move from here. Okay, and also still very cheap. And watch out, more people are gonna be moving to crypto than stocks. Watch out of this one. Okay, so that's another thing right there. Uh, so euro dollar, I do expect a move up in the euro dollar, guys. Sorry, what I meant is the dollar to be strong first. So what I would like to see a move down first toward 1.7 or something. Then after this move down, there'll be a move up. Okay, I would like to see this happening. You're most welcome. Okay, same scenario right here. I think that's a very good buy, guys. The dollar CAD at 1.25, which is a very good level. If you drop the MACD, which is a very, very reliable indicator, that's a beautiful, beautiful, beautiful buy, in my opinion, guys. That's a beautiful. If you into Forex and stuff. Uh, so USD CAD's a good buy. Okay, that's a very good buy, guys. I would skip this one for now. Euro yen gave a signal yesterday, it was good. Euro New Zealand also good, guys. Okay, that's a good buy because the market need to come down. This has been going crazy. Oh, you mean franc, Swiss franc? Against what, like USD CHF? See, I don't like to trade CHF a lot, but what currency exactly? Like you USD chief? See, you like you're in New Zealand. This is going again is the stock market. So I do expect the stock market to come down correctionally. So I do expect the Euro New Zealand to go up today. Okay. Euro Australian, the same thing. I'd expect an up wave right here. Euro bond that gave a buy signal yesterday. Euro CAD, I gave a buy signal from here. It dropped. See this? It just was crazy. But I would take this buy. See, guys, this buy I would take this one for sure because in the MACD right here, CHF USD, mostly popular is USD CHF, not CHF USD. So USD CHF, it will not be the best currency. Okay, why? Because USD and CHF, both of them are safe havens. So they're not very volatile. The volatility of the USD CHF per day is like 60 pips. Okay, and that's between going up and down. If you compare it to something like the pound Japanese yen or pound in New Zealand is about 220. Okay, so I think EuroCAD is a good buy from here. See this, and you also look at the MACD. Look, guys, at the divergence right here in the MACD. See the price. The price right there is going down, but the MACD does have another opinion. It's going up. Yesterday I gave a buy signal right here in the channel, but it was bad, I guess, because investors were expecting the Canadian news to be very bullish. So that's why, and the Euro index was just under so much pressure. Okay. Back to Cardano. We're just making a correction after such a big move, but long term, keep it, guys. I think is good. Here, Bitcoin is falling like crazy. See, let's go to the 1 hour. So Bitcoin, guys, wait. We may get a bigger correction. See, MACD started another wave down right here. So if this would fall, to what extent? Okay, I just remove this for now. But this wave can fall again. See, it dropped. I think this is gonna drop with the Feds today. Okay, possibly to the 61 or 50 level. So we can see this one. Followed by this one if it does 50 level. So it's still under a low pressure. And that does not look very good structurally, this drop right here. So far this is can't hold this. That's guys, wait for this correction. This drop was a very strong, and these are the levels right here to watch out for. So if we go back to scalping, basically you want to take signal cells now only, but you have to use stop loss just in case. So that's if you want to, what you do is trade these moves in and out very quick. And this will be disturbing because so much movement right there. It's probably easier. Oof. So we have XVS here. See, guys, a lot of them, once you have the big move, you come to 62 percentage, okay? Then after this, you get to 38, and it's coming to retest this one. So I think if this level is holding here, we don't get to a lower level, we're gonna go back up here. You're welcome. So, guys, Bitcoin in a correction down now. It may go further down as we talked. See, excuse me. So after this move, you get the MACD with a very strong reversal signal. That's a correction, I believe, is not finished yet. So possibly what can happen is we dip right here below this, make like a double bottom or something, or a head and shoulder, like this. Then if this is a good investment, then what you're gonna say after this wave, like a neckline or something right here, okay? And at that time, the MACD would have built its histogram down here, okay? Then you've got another one like this, but this one would have been orange, okay? And that would be your best buy signal right here. That will be the buy signal, okay? And it will be with some sort of a market structure giving you a reversal right here. At that time will be a good buy probably to take buy from here at 28.7 or something going up. Okay, that will be a good buy. Okay, as investment. So that's technically what's happening right now. Okay. But you never buy against a MACD signal in the H4 time frame. So you check the 4-hour time frame and you check the MACD. Okay. Technically, never go against this one. This is one of the best indicators ever been invented. Like I will give you anything, and we can hide the chart, and we can give a full analysis based just on the MACD. So let's say I'm gonna hide. So right now, I don't see the Dow Jones, right? So at that time, there was. So now I don't see the Dow Jones, guys. All right, all right. At that price, there was divergence. See here, right here. Okay, hidden one. This is a continuation. If you see the price is up, what does it mean? If it looks in the chart, something like this is deep. If in the chart, it looks something like this, okay? Then looks like this. So the MACD is giving you lower, but the chart is giving you higher. That's a continuation signal, okay? So let's see what happened in the chart. It doesn't like us. See right here. This that the lower right here. Okay, let's see another one. Anyway, that was nice intersection right here. Was a beautiful one, and it was a valid signal. See, it was a valid signal right here. After this, you're going in a correction right here. So in this case, you would just get out of the trade here. So from here, you would expect two things. The trend is going up slowly, or the trend started going down slowly. Okay. See, it started going up slowly. Why it's going up slowly, but the MACD is going down? Because the MACD reads the rate of change of price. It does not read the price. So the price is going up, but there is no good buyers. Okay, there is no enough buyers to. There is no steam. So that's why the MACD is going down. Okay, we hide this one and we move further down. Right here, it came to a full correction. Okay, all that was just to get in a correction all the way. Here, the start followed by a nice down wave. Okay, then this further down wave. See right here. So that's one low. This low was lower. It's all plotted in the MACD right here, right? That was a beautiful, beautiful buy. Sorry. That was a beautiful buy. We did give the signal for this one. Right now, what's happening is a correction. That's one of the reasons also we put a sell signal in the Dow Jones, expecting the Dow to have a correction. Okay. It's continued to go up in the price. So guys, what's happening right now? The price is still holding, but the MACD is going down. Why? Because there's one saying, if the asset is not increasing over time, it's losing money. So keep this in mind. If asset value is not increasing over time, basically it is losing. Okay. So that was a sell signal right here, where this is still holding. Okay, see this is still holding, no change, but the MACD is giving you a sell signal. That's an early sell. Okay, if you want to combine this with price action, what do? You just remove this. You come to a smaller time frame, 1 hour, and start, finding some support resistance levels and stuff. So let's say you're gonna go. Just keep moving. You're gonna come here and you're gonna take the Fibonacci levels right there. Okay, and you're gonna be watching this level maybe. Okay, guys, and also watching this low. Watch out, this low is equal to this high. Okay. So how you trade this one, you will be waiting here. If you see the price will go below this one, because in the MACD, in the bigger time frame, it needs a correction. But you want to combine this with price action. So we'll wait for if the price will break the 32,658, because this was a previous support to resistance area. So that was a support and that was a high, right? It did make a higher high, and this was a low, and that was a lower low. So the price so far is failing to make a new high, right? And the MACD is saying I'm going down in the 4 hour time frame. So really, I will not take a buy signal at the 32.8 at the 33,000 all time high. Two choices: I don't trade or I sell. Okay, I want to sell, but the MACD is giving me a sell signal. Should I jump and sell here? I will be aggressive. Okay, if I wait for this low to be broken and this high also to be broken and my close, see, that will be market structure high. The close of the new high also will be lower than the previous two close of the highs. That will be a full market structure. Okay, so if that's a high close right there, let's say, okay, and that's a high close, you want to see the price to come down like this, make a high here, close below this one. We're comparing closes now, not high or low, or high or lows. If you see the market break in this level, which is a support to resistance right here, okay, then also this, which is this area right there, right? This one and this one. If you break this one, it's also potentially a good sell. Okay, guys? So just to clean all that stuff. Okay, so I've got an idea right now how we trade the Dow with the Feds. You watch these two levels. If the price will break, So you see the price start coming down like this, back and coming down. See, this will be a selling area. Why? Because this was a support, became a resistance, okay? Or it was a resistance, it became, so it was a resistance right here, right? Then it became a support. And your support is broken, right? And also that was a high, okay? And this is a low, okay? So you have a close below your previous low. So basically the trend is reversing. So you're having a lower low and a lower high. So that the recent high, and that will be the new high, okay? And that's the low, and that's the low. So you have a lower high and a lower low. Okay, guys? So that's was also a little bit of technical analysis right there, how to look at the chart. So you may get a correction to the 62 level, okay? That still need a correction down. Is not ready to go up. If you look at the MACD in the 4 time frame, I would like to see it coming further down just to clear this. Okay, but can it shoot back up without coming? Yes, it can. No, nothing to say no. If we consider this wave right here, at least need to come to 1.67. We can come down all the way here and still being in a very strong uptrend. Okay, so we can come down all the way here, still in strong uptrend, and still hold your buy. And the MACD will be plotting something like this, down, 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 and from here, you can take a buy, or it can just come to touch, only land in the zero line and bang. Okay, so it depends on the momentum and the strength. So a good time to buy, I would believe here, with a MACD signal. Okay. If you see it coming down, but still strong momentum to the downside, wait till you see a reversal sign. Okay, don't rush to buy. Wait to get some signs of reversal. Okay, uh, like what? Like let's say uh, bound. So something like, sorry. So if you get a move down like this one right here, like we've had in the bound, see this one was a correction. How it will be a good buy? I will be watching the MACD right here. After the correction is finished, I see the MACD start to give a buy signal. I'll just make it bigger maybe. So I see the MACD, because I want to buy only, right? I don't want to sell. So I will wait, and see the MACD is giving me a buy signal, just this one. And I see the momentum right here. See, was red, start, decreasing, or, the buying momentum start increasing. This will be the best entry, because when you buy, you want to be down here. Okay, guys? In the MACD, you want to buy, you want to be down. When you want to sell, up. Okay, you want to, with price action, with pattern, with a signal right there. So you combine things together. That's how you probably get a good entry and potentially risk to reward. Really, you want to buy something at the top right here, okay? And you want to sell something at the bottom right here. The real meaning of buy bottom and sell tops is in the MACD, not in the price. Just keeping this in mind. You have always heard that buy top, buy bottom, sell tops. That's not in the chart. That's in the MACD, okay? And you can add something to it with a reversal sign, okay? So let's say it again. Is this a top or a bottom? Okay, is this a top or a bottom? Is this a top or a bottom? This one, this one, this one. You know, this one, this one. In the chart, really, you can't absolutely tell if it's a bottom or a top, because within the one structure, you will get this one right there. See right here? when this was getting constructed, that was a coming down. So the best thing is just to sell tops and buy bottoms in the MACD, not in the chart. So trade the MACD, not the chart. Okay. I hope this makes sense. Guys? Okay, guys, thank you for joining today. I think we have been 2 hours and a half exactly right now. It's 2 hours, 29 minutes. I hope this was a benefit for you guys. Thank you for joining today. Okay, and have a great day, guys. I hope the best for you guys and all of you make a lot of money. Okay, so invest wise. Don't get greedy. This market extremely volatile. Does not want greedy people. Okay, avoid greedy and you'll be good. Okay. Also, and we all of us should avoid stupidity, right? We don't want to do stupid decisions. Thanks, Ali G, 1975. So also, thank you. Okay, so guys, we want to stay away from making stupid decisions, all of us, and we want to stay away from being greedy. And also always respect technical analysis. Like technical analysis always have a value. Okay. Also try to ask and search before you buy things. Just to Google it, see if it's good. If buying, if people are buying it, join groups and stuff, and ask in the groups, you guys buying this? Is it a good investment? Why is a good investment like this? Okay, so stuff like this. Okay, I thank you. Goodbye.